Hello everybody, welcome back to the channel. I have an amazing video for you guys today. I have an article here from CNN.com you are not going to want to miss. It is very important. It's got amazing information, and I am going to be jumping back and forth from the article to the Redfin weekly housing market data to kind of compare the numbers. Now guys, check this out. What's next for the US housing market? Look at this. Things are changing. Things are getting aggressive out there, guys. The market is so volatile right now, and nobody basically knows what the hell is going on, to be honest. There are signs of slowing. There are signs of supply crunches, and with inflation, we have housing building problems because it's costing too much to build a house. So we have like the weirdest situation where it's like people can't afford the house, but yet there's not enough houses out for sale, keeping prices high. But it's all kind of crazy. It's a crazy. Look, check this out. Let's read a little bit. As recession fears for a large economy loom, the housing market is showing signs of slowing. Sales of new construction homes are down and construction is stalling. Sales of the existing homes have dropped and trending below 2019 levels. Mortgage rates have remained above 5%. Applications have fallen to their lowest level in 22 years. So basically, there's less buyers. So it's making, we just basically within I want to say a month, we went from 2 months, we went from a seller's market completely to a buyer's market. We are 100% in the buyer's market round right now. There's nobody's going to be paying anything above asking price anymore. Those days are done. You know, the days of waiving contingencies, the days of doing the rent backs, you know, when you sell a house, the sellers were literally saying I'm gonna sell you my house, but I'm gonna live in it for 2 months for free as part of the deal of selling the house. And buyers were like, go ahead, live in the house, I don't care. Those days are over, okay? I'm gonna tell you that right now. Forget it. Now it's a buyer's market. Now the buyers are like, I bought this house, get the hell out of my house, this is my house now, right? That's where we're at right now. So check this out, mortgage rates will stabilize. I already don't agree with this article. I think the mortgage rates are gonna keep going up, but let's read. The big surprise for those looking to buy a house during the first half of the year was how mortgage rates shot up so much, so fast. Interest rates for a 30-year fixed rate mortgage rose to 3.22% at the beginning of January, to a high so far sorry about that. And right now to 5.81 in June, according to Freddie Mac. So that is a huge jump. That's why we're seeing such a huge decline in mortgage applications, because now it's costing that much more money to borrow money. Someone buying the same house today that they wanted to buy last year will see a 50% increase in their monthly payment. See, that's what's happening, is that's causing people to be priced out of houses that they would potentially want to buy. So that's a big deal, and that's gonna be one of the reasons why. Well, that's one of the reasons why we have a slowdown, and that's gonna be one of the reasons why we're gonna see somewhat of a crash in the housing market. People's income, and listen to this, people's income do not rise by 50% each year. So home buyers are frustrated. This year there are total disbelief that they don't have the money to buy at a 6% mortgage rate. So it's not that they don't have the money to buy, they don't have the money to buy the house they want. That's the difference. They're gonna have to just buy something smaller, maybe in a not so desirable neighborhood, which sucks. I don't think you should sacrifice. I think it sucks to have to sacrifice to live somewhere that you're not going to be totally happy with, because remember, it's a huge investment. So if we keep reading, inventory will rise from last year. So inventory is, it's slow right now, but yeah, we are seeing more cracks in the market where we're seeing more people, we're seeing houses sit on the market for longer and more houses being put into the market, which is good. It's going to make the prices hopefully go down a little bit. Sales volume has taken such a much bigger hit than the prices. Buyers soldiered through some mortgage rates increase longer than we thought. That kept prices high, but some buyers began to drop out. So we're seeing people dropping out of the market, right? And it's making it less buyers. So that's gonna, basically less buyers and more supply is going to make the prices go down. So home prices will rise more slowly. The median price of a home reached a record high of $416,000 in June, super high, but that pace of growth has been slowing lately. The median house price for existing homes were up 13% in June from a year before, compared to the 23% spike in homes price in June 2021, according to NAR. Look, let's just jump into the Redfin housing data. What they're saying basically, look at the new listing price, right? This is 2019, and now this is 2022. The average listing price was $278 back in 2019. Now it's $395. Okay, people's salaries did not jump up this high. The reason it went so high from 2019, which was already high, to 2022 is because the Feds lowered interest rates to zero. We had coronavirus, which created a supply crunch. There was not enough houses on the market, but there was a lot of free money out there for people, so it kept it. But let me show you why this is bogus. Okay, this is people basically listing high, thinking that they're gonna get a high price. But if you look at the actual sale prices are coming down. And look at this, the year to year is coming down considerably, okay? So what is this going to do? You can here's the deal. You can list your house at whatever price you want. Go ahead, have fun with it. But this is the real data. What is it actually selling for, okay? Now, the problem is that it's still super high. This black line needs to be closer to this blue line right here. If we look at the new listings, we do have about the same amount as 2019 being listed, but that's the problem. We need the supply to go up. In order for the prices to come down rapidly, we need supply to go up rapidly. If we don't have that, I believe it's just gonna be a slow way down to more normal levels closer to 2019. So if we see something else in the market happen, like, if we start seeing a lot of layoffs, something along those lines, we'll see a huge spike in, foreclosures and people wanting to get out of their house. And that will make the new listings go up. And then if we still have a buyer shortage, right? If there's not that many buyers, that's gonna accelerate the prices of homes to go down, right? So it's all kind of happening all at the same time. It's kind of crazy. Here, let's just jump back into the article. There's some other fun stuff here. This is what I wanted to talk to you about. Affordability will remain a challenge. Home affordability is the worst since it's been in 1989, with the exception of the housing bubble from 2004 to 2008. But during the housing bubble, the lack of affordability was driven by mortgage offering teaser rates of a low as 1% that reset to a level homeowners couldn't afford and pay. And in the 1980s, homes were not affordable because of the incredibly high interest rates, with a 30-year mortgage rate spanning 9% to over 18%. Today's market is different. Soaring housing costs are driven by the compounding impact of apparent underproduction between 2008 and 2020, housing supply chain failure since 2020, and increasing demand since 2022. So that is not likely to change much by the end of the year. Okay, so we're still going to have a supply crunch, but again, less and less buyers. The Federal Reserve's action. Okay, so basically affordability becomes a challenge, and this is the key right here, is that basically when you look at median sale house, the sale prices, people's salary from 2019 did not rise this much, right? The sale back then was $278 and now it's $385. So it's almost like 30% increase. Our salaries did not jump 30% in the last 4 years. As a matter of fact, a lot of people lost their jobs. The only reason this jumped this much is because when you look at 2020 and 2019, okay, we had a huge dip on this. Tip was a big deal, okay, really big deal. This is the coronavirus dip on 2020 in the red, and it made it basically halted everything. And then in order to start the economy again, the feds lowered the interest rates to 0, and the people with the means went in and jumped on it, and they basically rose the prices all this much, okay? But it was fake. It was not real. It's not based on real economics from our cities and our communities. It was artificial. And whenever something goes up artificially that fast, that quickly, that strong, you are going to have the opposite on the other end. So we are definitely, now this is my opinion, but we are definitely going to see the house prices come crashing down. It's not going to be overnight, because again, we have a supply issue. We need a bigger supply for the houses to come down rapidly. Without that, we're not going to see it rapidly, but in the next year, 2 years, yeah, we're going to see prices definitely come down, possibly below that 2019 level. Now, I want to hear your thoughts. What are you guys thinking? Do you agree with me? Do you agree with the article? Please comment down below. Now, check this out. I want to just say one thing. Guys, I just started this channel and I've been getting amazing support, and I want to just say thank you for everybody who's been watching my videos, commenting, liking. I think you guys are awesome, and I just want to say thank you so much. I'm doing these things for you guys. I'm having a great time. I love the housing market, and I hope that you also enjoy listening to my videos. If you do like these videos, just don't forget to smash that subscribe button there at the end, and go ahead and like and leave a comment. Thank you guys so much for watching. I love you guys, and I'll see you on the next video.